Guys, have you heard about Yellen's warning to China and ongoing bond selling? Well, it's already getting out of control. And to top it all, these bond sales have been on the rise since 2022. Now, to fully understand the situation of things better, join me as we explore the implications of this trend and how it's caught the attention of top financial experts. So if you're curious about the potential impact on the global economy, stick around. We've got some eye-opening insights coming your way. As per the most recent International Capital Flow report, released by the U.S. Department of the Treasury on July 19th with a customary 2-month data delay, concerns have been raised among U.S. officials due to China's continuous decline in holdings of U.S. Treasury bonds. Over the past decade, China's holdings have steadily decreased by 35%, from a peak of $13.167 trillion in 2013 to the current $846.7 billion, marking the lowest level since 2009. This downward trend has prompted worries in the U.S. about the possibility of China further reducing its holdings to as low as $100 billion. During Treasury Secretary Yellen's recent visit to China, confidential negotiations took place regarding the issue of continued purchases of U.S. bonds. However, China has not shown any willingness to change its current strategy of buying U.S. bonds. The U.S. is closely monitoring major global buyers of U.S. bonds. But Secretary Yellen openly stated during a media interview on July 19th that if the U.S. faces the risk of a debt ceiling and cannot meet its full payment obligations to creditors, including China, there could be serious consequences. The full repayment of U.S. Treasury bonds is not guaranteed, which has caused further concerns. In recent years, the U.S. debt ceiling crisis and debt-related issues have raised questions about the potential impact of a U.S. financial crisis on the global economy. It is expected that the appearance of debt appropriations in the 2024 fiscal year budget may lead to another budget battle, a situation that demands vigilance. As the U.S. debt ceiling crisis worsens, there is a risk of a potential U.S. debt default crisis. This concern is not limited to China alone. 22 global official institutions, including Japan, the UK, and Belgium, have also been selling off U.S. Treasury bonds, resulting in a reduction of their total holdings to $7.527 trillion. Over the past year, there has been a decline from $7.66 trillion in total U.S. Treasury bonds, and major sellers in this market have been Japan and China. The selling activity is ongoing and has not ceased. Based on the latest data provided by J.P. Morgan on July 20th, the benchmark 10-year U.S. Treasury bond yield has experienced a considerable surge of 143 basis points since early June 2023. This upward movement has been quite pronounced, with the yield climbing from 3.602% on June 1st to its current level of 3.745%. Notably, on July 7th, it even reached an 8-month high, peaking at 4.094%. These figures highlight the ongoing pressure on U.S. bonds as they face continued significant selling activity. This upward trend in yields indicates a growing sentiment of investors divesting from U.S. bonds, which could have implications for the broader financial markets and the economy at large. Meanwhile, China's gold purchases have been consistently rising since 2022, reaching the highest level in nearly 5 years and establishing China as the largest buyer of gold among global central banks. This information comes from the World Gold Council's 2023 Central Bank Gold Reserve Survey. The latest report indicates a notable surge in China's gold imports, with a total of 546 tons of gold being imported during the first 4 months of this year. This represents the strongest quarterly performance since 2015, signaling a significant increase in gold demand. Additionally, the People's Bank of China shared new data on July 7th, revealing that China added a substantial 74 tons of gold reserves during the first 6 months of this year. This remarkable streak of gold accumulation spans 8 consecutive months, starting from November of the previous year, resulting in a cumulative addition of 165 tons to China's gold reserves. This continued trend indicates China's strategic move to bolster its gold holdings, possibly in response to ongoing economic uncertainties and geopolitical shifts on the global stage. According to data released by the People's Bank of China and the World Gold Council, China has imported a total of 620 tons of gold from major gold markets, including the US, the UK, and Switzerland during the first 6 months of this year. A report from the World Gold Council on July 11th highlighted that after purchasing a record-breaking 1,136 tons of gold last year, over 30% of central banks surveyed expressed their intention to further increase their gold reserves. Gold is considered a strategic asset with no credit risk and no depreciation, making it an indicator for pricing U.S. Treasury credit risks. As a result, the trend of global central banks shifting from being the largest buyers of U.S. bonds to the largest net sellers is becoming increasingly apparent. In a video program, Peter Schiff discussed the possibility of another wave of U.S. bond selling, which could lead to a bear market in bonds and significantly impact U.S. stocks and the U.S. dollar. He also suggested that global central banks, including China and Japan, might engage in large-scale selling of U.S. bonds, especially if uncertainties like implicit defaults increase. In such a scenario, China may empty its U.S. bond holdings. On July 18th, Invesco, a U.S. global asset management company, surveyed 85 sovereign investors and 57 global central banks. The survey revealed that about 41% of respondents expect to increase their gold allocations in the next 3 years. Interestingly, 70% of central banks expressed concerns that their gold assets in the U.S. might be confiscated, leading them to plan repatriation to overseas vaults in countries like the U.S. and the U.K. to ensure safety. Since 2022, central banks from 11 countries, including Germany, France, Hungary, Turkey, the Netherlands, Slovakia, Belgium, Venezuela, Austria, Switzerland, and Australia, have either announced or repatriated gold from the Federal Reserve or the Bank of England. These actions indicate potential changes in the international gold market. On July 16, the Polish Central Bank revealed its plan to repatriate 100 tons of gold from overseas vaults. The aim is to demonstrate the country's economic strength, making Poland the 12th country to announce the repatriation of gold from the U.S. On July 13, the U.S. website Zero Hedge reported on numerous countries repatriating gold stored overseas. Given the trend of the global economy's fragmentation, China has been purchasing gold since 2022 to reduce its exposure to U.S. bonds. Reports indicate that China is planning to repatriate 600 tons of gold currently held in the U.S. This aligns with the actions of Poland, France, Germany, and 12 other countries that are repatriating their overseas gold holdings. On July 18th, the Bank of Italy stated that it currently holds nearly 580 tons of gold at the Federal Reserve and formally announced its plan to repatriate this portion of gold. Similarly, Romanian authorities also revealed their plans to repatriate gold held at the Bank of England. A research report by UBS analyst Elena Amoruso on July 19 further supports the mentioned trend. The report highlights the recent strong interest in gold reserves by global central banks. However, it is generally considered preferable for the gold reserves of all countries to be stored in overseas institutions, as this allows them to be used as collateral for foreign exchange loans. It's worth mentioning that previous reports by the International Financial News indicated that China may currently hold 600 tons of gold reserves at the Federal Reserve. During the South African summit later this month, BRICS countries may announce the launch of a suitable new gold-backed currency, which could potentially weaken the U.S. dollar and establish a new global trading standard alongside the dollar. The World Gold Council's report also reveals that Middle Eastern oil-producing countries, such as Saudi Arabia, Iran, and the UAE, are accumulating gold at an unusual pace since 2022. Their gold holdings have seen a significant increase, with annual demand growing by 43% year-on-year. As one of the signatories to the petrodollar agreement, Saudi Arabia has been selling off U.S. bonds for 7 out of the past 12 months, reducing its U.S. bond holdings to a new low since 2021. Alright guys, that wraps up our video for today. So what do you think about these bond selling trends? Let us know in the comments below. If you found this video helpful, remember to hit that like button and don't forget to subscribe to our channel for more financial insights. Thanks for watching.